Hi and welcome to the Trade of the Day for the 24th of November. My name's Tom. I'm a senior trading analyst here at Trend Signal. I'm doing a bit of a weird thing today. We're going to be looking at two trades because there were two absolute monster movers spotted by our lower time frame trading system. So I couldn't pick between them. I thought I'd do both. It does mean it's going to be a little bit of a longer video. I thought I'd also mix it up. We're still going to be looking at the 2 minutes as we always do, but we'll have a look at the 5 minutes. There's a couple of different time frames we can trade on. And I'd like to run you through them. The spoiler is that just going to the default exits, it's the best part of nearly 1200 pips. So do stick around, it should be a fun one. With our intraday strategy, lower time frames, the way it works is we look for these black arrow flips. Now, whenever you see a black arrow flip over, it implies there's a new trade that can be forming. It doesn't mean that it's strong enough that we want to take it, though. We need to go through a 5-step process to make sure that we have both momentum and structural support in our favor, at which point we take the trade and we look to manage the trades through. Now, for people who are newer to the system, they'll likely do this through the use of the trailing black arrow. At this point, it turns into a trailing stop loss, locking you in to break even before locking in your profits to make sure you don't get too greedy and try to run this trade forever. In this case, we'll look through the 5 rules. And it's going to be quite thin, I apologise, just where the market's moved so far. It's a little hard to display. But we have the first arrow. It starts inside this band we call the PE3, which means we're looking normally at a lower energy trade. Now, that may be hard to believe, but what we don't get here is one absolutely massive red candle. We get a grind. It's just a very fast-paced grind with very little pullback. But it is a lower energy trade. The market hasn't been sufficiently stretched in the past for us to think this is going to be an immediate massive mover, which turns out to be correct. We then look for the short-term momentums. So these are called vector averages. We have 2 of them. They change from green to red. They're both red at the time we want to enter, so all good. Short-term momentums on our side. We then look at candlestick position. Now, with a lower energy trade, we want more room away from the resistance that forms in the middle of the market, and we want to make sure we're actually catching a proper trend. In this case, the open and the close are below the purple. We take the first one that comes available, which is the open of this market at the top of the red wick, of the red wax, rather. So we then move on to step 4. We need to look if the market is wide enough. We normally use something called the R ratio for this. On this time frame, we don't use that R ratio. We'll come back to it in the 2-minute time frame. But I can tell you this market was more than wide enough even before we came into this opportunity. The market's moving quite smoothly. And rule 5, lower energy trade. We want to make sure we're catching the trend. This blue to orange change color needs to be orange, implying the market is due for a further sell-off. So everything is fine, so we can enter this position. So let's have a look at it. These numbers are going to be approximate, but the final results I've made sure are nice and accurate. We'll put our entry level in at 25099. We'll bring our stop loss down to the black arrow. This forms in line with the recent range high, essentially looking to make sure we don't enter an ascending chart structure. We want to see the market descending because we're shorting. Finally, we run the trade through. Now, there's 2 real answers for the money that you could look to make off of the back of this. You can have a look for the kind of the default exit that the dynamic trader recommends, and you can have a look at the best possible exit. In practice, no one takes the best exit, but you can do a little bit better than the black arrows with a bit of practice. We lock through the trade, almost no pullbacks, no real headaches to worry about as we go through. We do come close to an exit at 535. Don't quite get it, move down a little further and take a few extra pips. Now, this move from open to the, I suppose, the hands-off method of passively managing these trades as they go through the motions, especially on the 5 minutes, it's a fairly long-lived trade. You are looking at the best part. I did write it down somewhere. 736 pips out of this movement, 736.14 to be precise. If that's not enough for you, you then do have the opportunity to go for the best move. The lowest points reached was at 540, a couple of minutes before we exited the position. Actually, about 20. We're on the 5-minute time frame here. With the best move about 854 pips. We'll go through some cash numbers a little bit later, but essentially, best part 750 or 850 pips. This was the sell-off that we had on Thursday. Since then, the market's been trading. There has been some good opportunities, but I really want to focus on one that's literally just happened. So I'm recording this on a Friday. You'll be listening to this on a Monday. I've just come out of a live trading room. We started at 2:30, and admittedly, it was an affair where we needed to make sure we were putting good risk management into place because a lot of the market was just suddenly turning and slow grinding. The reward that comes out of the back of this, however, is when we finally break that range. We wait the entire session for it. Let's go through the same 5-step process to see if this trade is valid, and then let's talk about the result at the end of it. So we get the arrow flip. We start outside. So this time we're expecting a higher energy trade. Weirdly enough, it was actually a bit of a grindy trade. It's not always high energy, but it's just I suppose, the most appropriate way to think about it when you first come in. So we have the arrow outside. The rules are slightly different for this case. When your vector average is green, still the same. We still want short-term momentum in our favor. The candle needs to be above the black PE, not the purple PE. The reason for this, think of an elastic band. It's pulled back further. It's more likely to snap off with more speed. We don't need to worry about being trapped in the middle and then moving to the wrong side of the resistance that forms in the middle of the channel. Okay. We then look to the R ratio. Now we do use the R ratio for the 2 minutes. We'll hover over the candle and you can see that it's 197.89. It just needs to be positive. It doesn't need to be massive as long as it's above zero. And finally, we don't care about the trend, but it is in our favor. It's blue. It's a nice extra string to add to the bow. What you'll find quite often is with these higher energy trades, where the market's been stretched previously from this previous move down, you'll often find that you're trading against the trend, but it's not the case in this case because we had a nice movement before we got the opportunity. What that means is we can have a look at this trade. It was a valid trade to take. So again, these numbers are approximate, but the ones I've written down are accurate. So we have a stop loss at our black arrow. We have an entry point on the first valid path, which in this case was the open of the candle again. And then we have the final destination with the black arrow. This one had a little bit more pullback on it, but still a really nice smooth move the entire way through. So pip numbers, in terms of black arrow exit, 435 pips. And the best move possible was actually a little closer to our exit, so the more passive approach wasn't too bad. It was the best part of 478 pips. To put this into context for you in real cash terms, if you take both black arrow trades, so just follow the trades through naturally to their conclusion as given by the system, it's 1,171 pips. And a scattering extra. Roughly speaking, a pound per pip beginner account is 1.1k. It's 1172 pounds in your pocket. And if you're trading with £3 per pip, that turns into 3,516. It's the same strategy, the same trade at the same time of day. You're just trading with more money, essentially. If you're going for the best move, however, there is a little bit extra to take out of it. Not a massive margin, I will say. So with the best move, you're looking at 1,332.7 pips in total. A pound per pip, that's roughly 1,333 quid, or £3 per pip, roughly just short of 4k, 399 and 8. Pretty good, in my opinion, for one trade that lasted, I think, the best part of an hour. And this trade, which lasted from 1624 up until 1718. So, but both of them about an hour in length or so. If you want to see us trade these strategies, learn more about them and how we manage these markets, you're more than welcome to join us for the session that by the time you're listening to the video will be later today. It'll be at 12:30. Not only do we teach you the theory behind this and all the education and risk management and everything else you need, but we also call live trades in the session as well, given that the market gives us a few opportunities to jump into. So come along, learn about the intraday markets, find out more about how we've been trading the market since 2003, and hopefully make a bit of cash for the ride as well. Hopefully I'll see you there.